Hey guys, Dave Keller here with Market Misbehavior. Today's video all about what's next for the Nasdaq 100, the QQQ. So 2023 has been a raging bull market for the growth areas of the market: technology, communication services, and consumer discretionary. The Nasdaq 100, the QQQ, is an ETF that tracks these largest names in these growthy sectors. Names like Microsoft and Amazon and Nvidia and others represent these 100 largest names on the Nasdaq. To be honest with you, the Nasdaq 100 in a lot of ways mirrors the performance of the S&P 500, if not leads it a little bit. And the reason is because they're both dominated by those same mega cap names. The biggest stocks in the S&P outweigh the smallest stocks by orders of magnitude. They're huge weights because these indexes are cap weighted. Now the Nasdaq 100 are all pretty large names, but again, those top weighted names like Apple, now over a $3 trillion market cap, certainly have the strongest weight. So what we like to do in these sort of videos, what we call a choose your own adventure style video, we'll explain what has happened so far with this particular ETF, the QQQ. We'll talk about 4 potential future paths. And the question is simple: which of these 4 paths do you think is most likely over the next 6 to 8 weeks, and why? I'll show you the 4 scenarios. Be sure to drop a comment below and tell me which one you vote for and why. Here's the chart of the QQQ, and we're going to go back over the last 2 years or so just to bring in the rally phase in 2021. I think it's important to remember sort of where the QQQ sort of topped out. The Q's topped out just above $400 a share on an intraday basis. We then rotated lower, and just the strength of 2021 was then complemented very strongly by the weakness of the bearish phase in 2022. The QQQ bottomed out in October of 2022, right where the S&P did. From there, a bit of a higher low there at the end of the year, and then a nice rally phase through the course of 2023. And except for a brief 6-week pullback from early February to mid-March of this year, overall it's been a pretty consistent, what we call a relentless incline. It just keeps going higher and higher. If you're sitting there waiting for a pullback, there really hasn't been much of a pullback, except for in the last couple of weeks where we saw a bit of a drawdown from around 372, we'll call it, down to around 358. But now, as this week is finished, we're right back up testing new highs for the year. So here are the 4 different scenarios I would call out for you. Number 1 is the super bullish scenario. The super bullish scenario, we say we not only go back to all-time highs, we actually break above there. 400 on the Qs is the upside objective, and then we just keep going. Now, the reason, or really the point of this sort of analysis, is what's called a probabilistic analysis. What would actually happen in that scenario? We think about what would need to happen for the Nasdaq 100 to continue higher, for the Qs to get above $400 a share over the next 6 to 8 weeks. This sort of rally that we've been in would have to continue at a pretty aggressive pace. And if you basically just take a trend line, taking the recent performance and extend it, right? So let's say like this is sort of the pace of this of the incline, right? We'll make this a big kind of thick line. This is kind of tracking over the last couple months, coming off of that low in late April. What's sort of the overall trend? I'm just kind of drawing a midpoint to this trend over this period. So if you continue at this same pace for the next 6 weeks, that gets you just above $400 a share. Again, that's if just we have the same kind of movement we've had since late April. We just continue this current trend. Is that possible? Of course it is, right? It's absolutely possible that we could go much further and just continue to go higher. But think about all the conditions right now, how these leadership names seem overextended. That would just have to continue. We would have to be pressing that long side over and over. Shorts would probably have to get massively squeezed. If you're short in this environment, you would get completely squeezed out. That could propel the market much, much higher. And all the themes we've been talking about in 2023 would just become magnified. There would be an exclamation point on things like narrow leadership, on the domination of these mega cap growth stocks that continue to push higher. And also, we would be plowing higher through what is often considered the seasonally weakest part of the year. May through October is actually the weakest 6 months of the year. And for this sort of move to happen without a major correction, that's what it would need to take to get us up there. So that's an important note. I think the super bullish scenario would mean no major pullback, maybe a couple percent at most. But overall, we would just have to continue this pace over the next 6 to 8 weeks. So that is the super bullish scenario. We get above the late 2021 high. We make new all-time highs for the Qs, and it finishes above $400 a share. Scenario 2, the mildly bullish scenario. We get up to previous highs, but let's say we don't break them. And maybe a quick illustration of what that might look like. Maybe it's a little more like this, right? Maybe we continue higher, and then we sort of drop down a little bit, and then maybe we kind of go up here. And it's sort of like a nice move. You know, overall, we're still fine, right? The bullish trend is still okay. But we have enough of a drawdown that it prevents us from just going higher, right? The pace of this starts to change. Another way that this could actually play out, to be honest with you, would be something like this, you know, sort of like a big sort of drawdown type of thing. And we sort of chop around in this period. So, you know, we have a more significant drawdown, but we remain above around 350. And 345 to 350 is an important one because that's a Fibonacci level. If you take the high from the fourth quarter of 2021, take the low from the fourth quarter of 2022, you can see 38.2% of the way up is right here, just above 310. You can see we pulled back really nicely from there, broke out, retested that level, and then broke out. We didn't even pause at the 38.2% level, which is around 346, and then we just continued higher. So mildly bullish scenario, scenario 2, may involve a drawdown, a significant one, but we remain above this level, and that's key, is that by the end of you know, the next 6 to 8 weeks, we've remained above sort of 345. And just for your, let's see, for our benefit, what would that mean? You know, if we'd go there, that would be about, what, 6% below current highs. If we'd rally a bit more, it'd be like a 6 to 10% correction. If we would rally, you know, another 15 points and then sort of pull back there, that's not an end of the world pullback, but it's certainly a significant one. And it would change the character of this market enough that we would really be thinking in the back to school age here, right around Labor Day, whether this is the beginning of a bigger decline or a massive pullback and the buying opportunity of the year, setting us up for a rally through year end. That brings us to the scenario number 3, the mildly bearish scenario. And I would say what that would involve is we don't get much higher than current levels. Let's say we start around here and then we start to go down, right? And the problem is we go down enough, and maybe we do this and we sort of end up down in this range. So we go down enough that not only do we draw down, but we get below 345, and we finish 6 to 8 weeks later just below there in between these extremes. 310 on the lower end, we'll call it 350, 345 on the upper end. So we've actually retraced into the midpoint of this range. We end this period right around the August 2022 highs. And again, coming down from the high here, assuming we don't get much further than current levels, that would take us down about 12-13% to sort of be in that range. And so this range would be anywhere from about, we'll call it 8 to 17% below current levels, right? So it'd be a pretty significant drawdown. It'd be the worst pullback of the year and would get us back to sort of this midpoint of the range. I would say at that point, what most likely would have to happen is the growth stocks that have been leading would really have to cool off. Charts like Apple and Nvidia and Alphabet just pushing higher and higher would really have to retrench. Meta and others would have to come down as well. Leadership groups like semiconductors, of course, but others like home builders, cruise lines, these names that have really emerged and exploded to the upside would all have to take a breather. You'd most likely in this scenario see a real improvement in defensive areas of the market. People would be forced to go into like consumer staples and utilities just to protect against much further drawdown. So that's scenario number 3. We'll call that the mildly bearish scenario. This gets us to the one of the more fun ones to envision and just think about what this could look like. Scenario 4, the very bearish scenario, the super bearish scenario. That would involve not much upside and also a lot more downside. And it would actually have to happen a lot more quickly than this to do it in 6 to 8 weeks. I'm going to have to compress this time frame. This would be a pretty painful little stretch here. And pretty much to get below 310, we would have to stop going up and start going down in a big way. This would most likely not be just an acceleration downside. This would be a multi-step decline. Think of it like an ABC decline, coming down quickly, bouncing, and then instead of buyers coming in, which would be kind of the mildly bearish scenario, it doesn't. I mean, that's just an opportunity for a reinitiation of shorts. No buyers emerge. This is the collapse of the growth trade. everyone's defensive. Probably most risk assets are going down. People are going to gold and just hiding out in super defensive things like treasuries. And as a result, stocks really start to take a beating. This would feel, the super bearish scenario here going into the third quarter would feel a lot more like 2022 than we've experienced all through the previous 12 months. So the very bearish scenario would be concerning, of course, because of the change of character. But what's interesting is, what I always remember is, you remember a 30% loss always starts as a 3% loss, right? So what would need to shift in the short term? What levels or what lines in the sand would have to break for us to clear the way to get all the way down below 310 over the next 6 to 8 weeks? Probably a lot of things would have to happen. A lot of changes, a lot of breadth conditions would have to rotate to really propel the market that low, or really just completely change the field of the market that we've experienced over the last 9 months or so. So those are the 4 scenarios. Which do you see as most likely and why? The super bullish scenario, we power above 400 and finish the next 6 to 8 weeks. We head into the Labor Day weekend talking about this new all-time high for the S&P, the Qs, and all those major equity indexes. The mildly bullish scenario number 2 would be we continue sort of this pace, but the pace slows down a little bit. Maybe we get a little a pullback that's a little more, a 5 to 10% pullback. So we remain elevated, but we pull back enough that things start to feel a little different. Scenario 3, the mildly bearish scenario, would be we do not hold 345. We actually pull back and go through that level, but stay within sort of 310 to 345, sort of the midpoint of the range over the last 18 months. Scenario 4 is the very bearish scenario. We go down, and we go down big. 345 doesn't hold, 310 doesn't hold, and the Qs finish back down toward the lower end of the range. And we're all talking going into Labor Day weekend about the retest possibility of the S&P and the Nasdaq going and retesting their 2022 lows. Vote below which number and why. For Market Misbehavior, I'm Dave Keller. Be well, stay safe, have a great one.